Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 28th, 2017. Wanted to cover the home builders in this video. This is an active trade on the site via XHB, that's the Spiders S&P Homebuilders ETF. This is just a clean looking chart, one of the better risk return sectors as far as a short goes, or long or short for that matter. You guys know I'm an equal opportunity trader. You give me a chart, I don't care what the trend in the broad market is. This market, especially in recent years, has been marked with a tremendous amount of sector rotation. You've had vicious bear markets in the energy stocks, commodities, gold mining stocks, all while the stock market screamed to new highs. And then you can drill down even within the sectors that are more correlated to the stock market. You've also had a good deal of sector rotation. In fact, energy is usually correlated with the broad market. So this is one that, again, I think there's a good deal of meat on the bone. And at the very least, I like the risk reward. You can see the stop is set not too far above. We have S1, the support one. S1 means first support level, well defined. You can see all these reactions above and below, and a reaction back here. I do expect that level to go, although it hasn't been taken out yet in XHB. I'll show you some of the home building stocks. And those are also great trade ideas. As I've always said, you give me a sector, bullish or bearish, and I can usually sniff out the most bullish or bearish stocks within that sector and outperform the overall sector. So if you guys are comfortable trading individual stocks, and what I like about this, and the reason I'm doing this video now, is most of these are now out of their earnings are out of the way at this point. The majority of these companies have reported, so we have an all clear. You know, I had a little reluctance before, and so anyways, I added to my position today. All right, so here's XHB. You can see the breakdown. Clear impulsive candle today, down about 1%, still well below the stop level. Waiting to see these trend indicators, the PPO drop down below the zero line. That would be that dotted line there. That would help, and also see the RSI cross well below the 50. It's a little below the 50 level now. ITB is another home building ETF. The iShares Dow Jones U.S. Home Construction Index Fund ETF, and you can see the same story. Well-defined uptrend line, clean bearish rising wedge, negative divergences, everything you want to see in a pattern. There's a thin zone down here. So the way I see this one playing out, not a lot like XHB, is I see a break of this support. Won't necessarily be a straight shot down, but I see a reaction there, a bounce, and ultimately this is where I see the home builders coming down to. And that's a drop just in the sector alone using this ETF, about 12%. So a pretty decent trade there. Let's go through the components of XHB, because that's the one I opted as the official trade idea. Before I do that, by the way, you guys can, if you don't have access to shorting, you don't have a margin account, Claw, although not crazy about holding the 3-time leverage ETFs for long-term trades, Claw is the inverse, bearish, 3-time bearish home builders ETF. And you can see it's just going to look the same, like the same chart in reverse. You're going to have a bullish falling wedge instead of a bearish rising wedge pattern, and this one started to break out recently as well, and then nail. Sometimes I'll even short the 3-time leverage in the opposite direction that I want to trade, so you can short nail and then put that decay in your favor, and you can see the clear bearish rising wedge and a breakdown there, impulsive break. So all right, this video will be quick. I just want to go over, there's not many components of the home builders. Here's the components of XHB. Trying to talk fast, get through all these videos. I want to cover as many sectors as possible today, and I'll sort these in order. Let's do an order of market cap. How about that? Okay, so now you can see it here. So DHI we'll start with, because that's a $13.6 billion company, and you can see negative divergence. PPO and RSI making slightly lower highs against prices, clearly making higher highs. We had a foiled, what looked to be a bull flag pattern there, failed, a little breakout that failed. That's bearish, and at the very least I expect this thing to come back down here and test this trend line, and we have price support just below. So I see a move down to about 34.50, maybe a little, probably a kickback rally there, and probably another leg down, but even if you wanted to take this one down from here, you're still talking about 3%. Not the most meat on the bone, but if it breaks that support level, it absolutely has more downside. In fact, I would see this one going all the way down to this level right here, about 32.50 or 60. LEN, Lennar, it's nice, clean, bearish rising wedge. I had parallel trend lines because they both had reactions. I've already covered these in another video. You can check that out, so I won't spend too much time, but it's playing out as expected. Nice impulsive breakdown, down 2% today. This is a type of breakdown that you can say with just a couple hours left in the trading session is legit and confirmed. Anything is possible. Kickback rallies, back tests, false breakdowns, but again, there's too many components in the sector confirming what the charts of XHB and ITB are confirming, in my opinion. So I give the risk of a failure on these is very low, and I see this one moving down to that level there, that first target reaction, and possibly an additional, once that level breaks, we could fall quite a bit more. So that one alone has about another almost 5% downside. NVR, this one was walking its way up within this ascending price channel, just recently hit the top of the channel on an earnings pop. It had a post-earnings pop, a little rally, which they're now starting to fade. There's two ways when you're trading price channels. You can either wait for a break. Now that would be a longer term swing short signal, but you can also short on tags at the top of the wedge. That's an objective level to short. Well, I'm sorry, not wedge, channel. So in that case, this one brought you down to the midpoint, and that's something else to notice, guys. I've always tend to notice on many price channels, if you draw a midpoint line down in the middle, you'll see that prices tend to act as support or resistance. So they'll walk up the upper part of the channel, the top half, and once that's broken, then that becomes resistance overhead. So the main channel is defined by the white lines, and you can see these brief visits down to the bottom. Now in a strong uptrend, you'll usually see prices up at the top of the channel more than below. So what I'm getting at here, there's 3 levels to short this stock. Right there on the top of the channel, I had pointed the channel out in advance. We've come off it now on a break down below the midpoint of the channel and on a break below the bottom of the channel, and at bare minimum I'm looking for a move down to this line right here. It's about 22.50. Yeah, that's an expensive stock. About 22, I'll give you the number in a second, but it would look something like this. So value wise, 22.57 or so is the actual support level. We may get a bounce. I'd like to put my buy to cover limit orders just above that. So there's one possible trade idea. Negative divergence confirming. OC, not a builder, but you guys, most of you know Owens Corning. If you've been up in your attic and you look at that pink stuff, the insulation, more often than not, that's from Owens Corning, and other things. They do a lot of other stuff. So building supplies, they're birds of a feather. They're gonna move up and down in tandem with the housing industry in the home builders. So there it is, bearish rising wedge, negative divergence, and we had a little false breakdown. Looks like an earning induced pop back into the wedge, but your next sell signal will come on a break of that wedge again. Earnings is out of the way now. And then more importantly, a break of this level, that's support at 63.63. So call it 63.60 to be safe. A trigger break of 63.60. And again, the first sell signal would be a break of this uptrend line. So maybe you can add to your position there, take it to a full position. And the way I see this one playing out is like this. Breakdown, maybe a little reaction there. Move down to this level, another reaction, and ultimately a move down here to the $56 level, and that would constitute a drop from where we're at right now of about 17% if you're willing to ride out those counter trend rallies. PHM, Pulte, bearish rising wedge, support right there. You can see support 1 right there, 23.28, T2, or that would have been, let's say, first target. Around 23.28, set your buy to cover a little higher, and then 22.10, that would be my final swing target at this point in time. Negative divergences confirming the wedge, everything else. Again, a lot of these charts are very similar. There's Toll Brothers, bearish rising wedge, confirmed with negative divergence, breakdown. This one is breaking down below its comparable support level. Bare minimum, I see this support zone being hit, and my preferred swing target at this time is 35. So that one, you know, drop from nearly 39 down to 35. You're talking about a 9.5% drop. Not bad for a pullback, you know, short trade. CAA, I don't see anything there interesting. TPH, I do see a trend line that was broken, and but I'm not crazy about the chart. XHB and ITB I already covered, and the rest are just the ETFs. All right, that's it. We wrap this one up in just over 10 minutes. That's the home builder sector, and you know, I may have misspoke because in XHB, I had mentioned earlier that these were the components of XHB. These are the components that I added to it. What happens is I should have clarified. XHB is much more diversified. It has a lot of stocks related in any aspect of the home housing industry. So you have Home Depot as your big mega cap names in there, Lowe's. You can see all that. Now these also look bearish. There's Home Depot. You can see the rising wedge channel breakdown, Lowe's. So I spoke incorrectly, but this went early in the video. This is my list of home builders that I wanted pure plays on the home building industry, either home builders or companies that rely heavily on them, the suppliers like Owens Corning and all that. But again, you can go online and any ETF will give you the holdings, but there they are. There's a lot of other companies, and most of what I'm seeing in there, even on the big top weighted names like Home Depot and Lowe's, confirm what I'm seeing in the home building stocks. So I think XHB has some downside left in it. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.